Started with $1 in a dream. This one for all the people that said I couldn't do it.
Good day, Forex users. Thank you so much for making it up to lesson 14. And on this lesson, we'll be looking at the difference between continuation and reversal patterns. And the topics that we're going to cover are why we need price patterns, what are price patterns, requirements of the price patterns, difference between continuation and reversals, types of continuations, types of reversals, and then we'll take a look at the high probability setups. Okay, the first topic that we'll look at is what are price patterns? A price pattern is a recognizable configuration of price movements that is identified using a series of trend lines or curves. Technical analysts have long used price patterns to examine current movements and forecast future market movements. Okay, why do we need price patterns? Price patterns are used for forecasting to determine market direction. That's true. Requirements of the price pattern: previous prices and the supply and demand zones, meaning that we need the previous price, the history of the market. It doesn't have to be weeks and months and everything. We just need previous prices, hourly, monthly, hourly, and the days are also fine. And we need support and demand zones, meaning your support and your resistance line. Okay. The difference between continuation and reversal. Okay. The difference between continuation and reversal. They do exactly what their names imply. A continuation pattern forms and breaks in the direction of the trend that is developed within, while a reversal pattern breaks in the opposite direction of the trend it developed within. Okay, I believe that we understood what it meant. The most simplest way that we can explain this is that a continuation pattern simply means what it states. If it's an uptrend and then it corrects, like that correction phase, if it has formed the continuation pattern, it means that it's gonna break in the upward movement. It's gonna break to the upside because it's continuation, like it's continuating. And a reversal pattern simply meaning that if it's going upwards and then it starts to correct in a reversal pattern formation. Reversal pattern simply means that the breakout would reverse, meaning that the breakout is gonna be to the downside. Okay, now let's take a look at the types of continuation patterns. The types of continuation patterns. Okay. I'll start off first with the symmetrical triangle. The symmetrical one. Price moves upwards, then starts to form this here. Okay, then we have something like this. Okay, then let's say this, then we have something like this. Okay. I believe you guys remember this pattern here, the symmetrical. Due to this pushing here, due to the established trend being the uptrend, it simply means that the breakout is gonna be to the top side. It's gonna continue to the upside. Did you see that? And let's look at it in a downtrend formation. Let's say it formed the symmetrical. It's on. We spoke about it on lesson. I think it's lesson 11. So you guys know what's happening here. Then it forms like this and then like this. Then we have a portion like this and like this. It simply means that the breakout is going to be to the downside. It's continuing this. If you can look at it properly, like this, it's the same pattern. It's the very same pattern, but then the difference is that here it's coming from an uptrend. The breakout is still to the upside. It's continuing. Here it's coming from a downtrend. The breakout is still to the downside. It's continuing. Okay, let's take a look at the ascending one. Okay, we have a movement like this. Then it came down like this. I believe we all remember the ascending triangle. Okay, then yeah, then like this. Then you'd have a horizontal channel like that. Then you'd have something, a steeper support line like that thing. Okay, so since we know that this is the ascending triangle, and the ascending triangle is acting as in this manner, there's an uptrend, and we've got an ascending triangle here. So it's acting as a continuation pattern to the upside. It will simply break to the upside. We do know that, ne? It will simply break because it shows that the resistance line, it's like the resistance line here is horizontal, ne? Meaning that the sellers don't have that much, like they're not pushing like it it's failing to break this area. Let's say it's failing to break this area, but then the higher lows and higher lows, they show that this bullish movement, it's slowly gaining momentum. It's slowly gaining momentum because you can see the higher low was here, now it's here, now it's here. So expecting it now to break out to the upside and then form another higher low as it continues to the upside. Can you see it? Higher low, higher low, higher low. It will break, come back down, higher low, go up. Can you see that? Okay, let's look at it in the downtrend formation. We have something like this, and then you'd have a support line like that, and then resistance line like that. Simply means that the breakout is we should expect the breakout to the downside. There's a descending triangle. Expect the breakout to the downside. Once it breaks to the downside, we take advantage of it and then we capitalize more. You sell here, your stops here, then you go all the way down with it. Okay, I believe we saw the descending and the ascending. Now let's take a look at this, the rectangles. These ones are the ones that I like most, the rectangles. Okay, let's say price pushed upwards, then started forming this, then that, then here, then you have something like this, came back down, can have something like here, and something like yeah. See, there's a flag. Here's the flag pull, and here's the flag here. Okay, it's something like this. Like the reason we say it's a flag is that it's something like this. Okay, yeah. Can you see it? It's something like this. So it's a flag. Okay, so now you know that it's an uptrend. It formed a bull flag. You can see there's a bull flag. It's like with the flag. I remember us saying something like if let's say the uptrend, it's an uptrend, and then the slope of the flag is forming to the downside, meaning that the breakout is gonna be to the upside. Can you see this? The breakout is gonna be to the upside due to it being it's uptrend. It's a corrective phase in a flag that shows that we're gonna break to the upside, and then we can look at this as a continuation because we're looking at continuation patterns now. Continuation pattern. Let's look at it in the downtrend. Came like this, then done something like this. Okay, means the same. It's the same thing. Like these stuff mean the same stuff, just that in the vice versa manner. Meaning that if we're looking at it in the bullish manner, now we'll take it's the same scenario, just that in a bearish manner. Okay, take a look at that. Take a look at that. And then the breakout is to the downside. Can you see that? It's a continuation pattern. It's continuation to the downside, continuation to the upside. Same pattern, it's a flag, just the continuation. Okay. Let's look at the rising wedge. The rising wedge, okay, start downtrend and then done something like this, then something like this, then something like this, yeah. Something like this, and then something like, there we go. Then you draw this like this, then you draw this like this. There's a nice rising wedge. So you do know that it's gonna break to the downside. It's a rising wedge. It shows the corrective phase is becoming narrow and narrow. You guys can see that name. Rising wedge. And yeah, with this is the only continuation to the downside. It's the continuation, like with the wedges, this is the continuation to the downside. But then the continuation to the upside would be a falling wedge. A falling, because if you find a rising wedge in an uptrend, it would mean the opposite thing, which it will mean the reversal. Ne? So now the continuation would be a falling wedge in this manner. Okay, that okay, I believe it will be a valid one. Okay, yeah, falling wedge. So the breakout would be something like that. Can you see it? It's falling wedge, break out to the upside. Falling wedge, it breaks out to the upside, whether it's continuing or reversing. The falling wedge breaks to the upside, and the rising wedge breaks to the downside. Okay. Okay, Jesus. Now let's take a look at the types of reversals that we experience. Ne? Start off first with the symmetrical. Ne? Because we started with the symmetrical. Price moved upwards, came back down, experience that, came back down, experience that. Okay. It's very possible that the same pattern that we're expecting it to break to the upside, breaks to the downside. That's very possible, especially with the symmetrical triangle. Other ones, okay, they mean or what they state, meaning that if it's a flag, it will break to the upside. If it's a falling flag, if it's a falling wedge, it will break. Like that's what they mean. But then the symmetrical, there's chances of it too acting as a reversal. Because something like this might possibly happen, like this. Can you see this? And then we go all the way down with it. But then in this manner, I wouldn't suggest that you look at this this corrective phase as a as a as a as a reversal. Like don't whenever you see it on your analysis, don't try to trade it as a reversal. Rather, wait for perfect confirmations, which is something like a breakout and then a young correction, and then you can tick that. Can you see it? Okay. Now let's take a look at the ascending wedges. I mean ascending triangles. Let's say it came from the downside. Came from the from the upside going down. Then price starts to do something like this. Like yeah. Then you have that. Then you have, there we go. Then you have something like this here. Then you go up here. Then okay. You can see you have something like this here. And you can see you have that horizontal. It's not a wedge, it's horizontal. Let's make it horizontal. You can see that. So it simply means that whenever price breaks this area here, this will be treated as a reversal area. Can you see what it means? Like this is the ascending type. The ascending triangle, it breaks to the upside. And you can see it gave us an ascending triangle. An ascending triangle, which states that we're going back to the upside. It's a reversal pattern. Okay, to be more confident, you can wait for something like that. You take that, like you wait for this resistance area to be treated as support, and then you take it to be much more confident. But this acts as a reversal phase, a reversal corrective phase. Let's take a look at the sun here. Price came like this, then it came down. Then here, support area. Then here, then you'd have something like this. Then you'd have something like this. Straight. Let's make it a bit more straight. That okay. Then it came back down like this, then up. Then you expect a movement like to the downside. Can you see it? It treated this area as your support area, but then you can see that your lower lows, your lower lows, your lower lows, your lower highs, your lower high, your lower high, your lower high. So expecting another lower high here, because this is the lower high, and then we go down. Can you see it? It acted as reversals. Okay. Let's take a look at the flag. We've got let's say a movement like this. Then price starts to do something like this. And I'll show you guys how you can apply these ones here. I'll show you guys how you can apply these ones. Okay, then you have something like this. Okay, let me have, this should be in a rectangle formation here. Okay, then price came back down like this, went back up, and then the breakout. Can you see? It's a flag. It's the flag that we've been studying about, but in this manner it came out as a reversal corrective phase. It's now reversing because it's an uptrend, and then it gave us a bear flag, meaning that you saw that even if it's a downtrend, and then it does that flag that goes like this, that one, it will break to the downside, it'll break, and it's the same flag here. It's the same flag, regardless of where it's coming from, whether it's down or up, it has to break to the downside. Okay, let's take a look at the sun here. Came from the upside going down, then experiencing something like this. Okay, a nice bull flag here. Cleaner one. Then we break out to the upside. It's a reversal 1-2 because it's downtrend. Then it gave us a flag. Then it broke out to the upside, meaning that it's reversing. It's not continuing to the downside. It's now reversing and going all the way up. Okay, I believe we saw those ones. And now let's take a look at the rising wedge. Let's say price is pushed upwards, came back down, done something like this. Then gave us something like this here. Then done something like this. Then went up. You can draw your resistance line like this here. You can draw your support, and you can see it's much more steeper. which states that this is a rising wedge, and a breakout like that would be seen as a reversal. Can you see it's up? It's an uptrend, a rising wedge. Like if you, this is how it is. Let's say if you're in uptrend, and then you find a rising wedge, it simply states that we're going down. It's a reversal. Ne? So if it happens that you're in a downtrend and then you get something like a falling wedge. Okay, falling wedge. Then you draw it like this. Then you draw it like this. Okay. Simply states that we're going back up. You're in a downtrend, you get a falling wedge, you're going back up. It's a reversal. It's a reversal. Okay. Now let's take a look at how you can apply these ones and get a high probability setup, because you can't just apply them like that. Okay, so what I'll do is that I'll show you guys a few examples, and then we'll go to the real-time market and see how we can take advantage of them trading live. Okay. To start off first with the continuation pattern. Let's say continuation pattern. You'd get something like this, an uptrend. Okay, let's say it's an uptrend like this, bigger time frame. Your daily or your weekly states that you're in an uptrend. Then it market is moving something like this. Yeah. Okay, then it gets somewhere here. Yeah. Let's say it does something like this. You know, the market doesn't move exactly straight like this, but then it does something like this. Ne? I don't know. And then it breaks out this area here. Breaks out to confirm that we're going back up. So what you do is that, okay, you found it in the daily, there's a daily time frame. Ne? We found the daily time frame that we broke this key resistance line. So now we're going back up, and it's an uptrend. Since you know that uptrend has to break the high, it has to break the high. So it has to come somewhere. Yeah. Ne? Higher high, higher high, higher high. So what you do is that on the smaller time frame, your 1 hour and your 4 hour, you start looking for your continuation patterns to still go up until this area here. Till this area here. So meaning that something like this, continuation pattern means that you can get all sorts of continuation pattern. You can get something like a flag on the 1 hour time frame. Then you take it, ne? You take that flag, then you continue, put your stops. Instead of putting your stops all the way here, you put your stops here. Your target is placed all the way at the higher high. Can you see this? Your target is placed at the higher high, then you go upward there, and then you can get another, something like, let's say, a falling wedge. Then you take it to, then you move up with it. Can you see how you trade with the strategy? Like you just, when it's going up, you saw with the bigger time frame that you're in an uptrend. Ne? In the bigger time frame, you saw that you're in an uptrend. So what you have to do is that in the smaller time frames, you just look for continuation patterns to still continue to go to the upside. Because if you start looking for sales in an uptrend, if you start looking for sales, you'd get a short term sell, and then you won't have that full confidence to hold it because the momentum is to the upside. So you have to look for continuation patterns to the upside only. Ne? It's an uptrend, you just look for continuation patterns to the upside. Then it moves all the way up. Look for continuation patterns all the way up until it gets to your area there. Can you see this? So meaning that even if it breaks, it can come back and treat this area, resistance area, as support. Then it got you with the pattern that states that we're going to the upside. So what is meant is that let's say if it's an uptrend, and then you see that it's moving like this, then it touched your support area, and now it's going up. It confirmed that we're going up now. You don't have to just buy at the same time and leave it. You have to look for areas where you can enter with your buys. You are right that it's going up, but you have to look for areas that you can enter and be able to minimize your stop loss. So in this area here, you're going to be looking for continuation patterns only. Continuation patterns only, meaning that if you get if you get something like let's say a flag that states that we're going to the downside, a flag. Okay, I don't know how can I wrap this. Okay, let me do this here. Okay, yeah. In this area, we'll be looking at continuation patterns only. Ne? So meaning that if you get a flag like, let's say this price goes up, and then you get something like this, a flag like this, it shows that it's going to break to the downside. Ne? You do know that, but you don't have to take it. Wait for this breakout to happen, because it might be breaking out to form something like this. Then, can you see this? A bigger flag. Okay, so if you take the sell here, it'll hit you, like you are more likely to be taking out at break even, or your stop loss will be hit because you'll be holding it going all the way down at it, and then your stop loss would be hit. Ne? So just focus with it, focus utilizing it, and know that okay, it's gonna break to the downside and come all the way up to here. Then for me, I'm gonna continue to sell. I mean, I'm gonna continue to buy. That's what you should do. That's how you should utilize these reversals while we're still going up. But in this area here, look for just your continuation patterns. Ne? Let's take a look at how you can take advantage of the reversals. Okay, let's say you've got the same uptrend. The same one, it's going up, bigger time frame, going up. Okay, the second touch here, this is the first touch, the second touch. Okay, then the third touch, ne? Then going up. So what you can do is that market price, you saw that market price is going all the way up, ne? But now you can see that this area here is resistance line, ne? And this one here too is resistance line. So we've got the resistance here and the resistance here. So meaning that and it's going to create the third touch. Meaning that what you have to do is that you have to start looking for how market price gets to this area, to the resistance line. You don't just the reversal pattern, you don't just take them when you get them. Like you have to have strong reasons of taking them. Meaning that in my area here, I would say that market price does something like this. Okay. Can you see this area here? Check this out. Then we take that nice reversal pattern. See, it gave us something like a rectangle. Yeah, a nice flag pattern. Can you see this? The third touch, it gave us the first, second, third touch. And the advantage of taking, like, utilizing this kind of setup, I mean, this kind of strategies that people would see this. Let's say once price closes above this line, people would see this as a breakout, and then they'll say buy, don't buy, and they see it as a breakout. But it's not actually that way. It's not a breakout because you can see that this line is being treated as resistance. You draw your resistance line like this here, then you see that it will just respect it and go all the way down. And if you look at this area here, you can see that price has formed what? A double top, which states that you have a confirmation. You're at the resistance area. Your structure here, let's say this daily, daily you're at the resistance area. Your 1 hour time frame it's showing you it's showing you your flag that shows we're gonna go to the downside, your reversal flag, and another confirmation is that you've got a double top. You've got a double top, so you know that you're going all the way down now. You start to sell, then you go all the way down, then you look how you get here, because you might also get here something like this. Is what you have to look for: how you get at support and how you get at resistance, ne? Then find out that you get here with maybe a falling wedge or another pattern, and then a double bottom, and then you go all the way up. Can you see how you utilize these structures? You just see with the reversals with the reversals, you just see how you're getting at support area and how you get at resistance area. The kind of manner that you get there. If you get there with an impulsive phase, let's say you get it shot all the way down and then it's like this. Then can you see, let's say it's at support area, ne? Once you get at this area here, at support area, then it does something like this. Then you know that you're going all the way down. Then you are confident to take the sell opportunity. Ne? Even though it's at resistance area, support area, you are confident to take a sell setup right here. Can you see that? So what matters with the reversals is that, okay, I believe we saw with the continuation, now you take advantage of that. But what matters with the reversals is that you look at how you get at resistance area, and then you look at what price does at support. That's when you should take a look at the reversals. How price acts when it gets at support or resistance. And with the continuation, you just look at, okay, you've got an uptrend, then you start looking for the smaller corrective phase that shows that we're still going to the upside. Then you take those ones. Okay, let's take a look at the lifetime market. Okay, chasers. Now let's take a look at the real-time markets, where we've got our pair euro US dollar. We like using this pair, I'm sure you noticed. We've got our pair euro US dollar here. And these drains that you see on the chart, it's from my back testing results, so don't mind them. Like, yeah. So like now we're staring at the different types of patterns, the continuation and the reversal patterns. So I want to show you guys how many patterns we can get in a trend. Now let's say for instance, at this pair, we've got it's the daily time frame, as you can see here, the daily time frame, and we can see that it's moving upward. Let's say we had something like from here and something like this here. Okay, so we're gonna start looking, like we'll be looking for for buy opportunities only, because it's in the uptrend. Can you see it? So once it only breaks the support line, that's when you can start looking for sell opportunities. Okay, so now let's say we drop down to the smaller time frame, your 4-hour chart. Okay, need to make sure we're on the right one. This is all from back testing. Okay, but you can even see here, can even see this pattern here. We had our flag that showed that we're going to the downside. Can you see here? Flag that showed that we're going to the downside when we took it. But let me just move backwards to that area there where I placed the. Okay, I don't know why this thing has taken time. Okay, so you guys are able to see on how we capitalize on these reversal and continuation patterns. Okay? That's what we want to do, capitalize on these patterns. Okay. Okay, and yeah, I drew all of this from back testing, so don't mind them being messy. I was back testing when I drew all of this here. Okay. Okay, it's somewhere around here. Somewhere around here where I drew the daily. Okay, yeah, here it is. Here's the daily trend line. Can you see here? But let me move there at the start of it. Where we started seeing that we've got an uptrend, an upward trend. Okay. There we go. Okay, nice. Let me just start off here. Here's our daily trend line journey. Okay. As you can see that when the market was progressing, going upward, we're able to find this something like this here. We're able to find something like a rising wedge that shows that we're going to the downside, that acted like a reversal. So even though it was in a uptrend, but then we're able to get this pattern here that showed that we're going to the downside. Okay? But then instead of you don't have to take these setups. You don't have to sell when it breaks out here. You can just know that let's say it broke out here and then it's coming all the way down to here. The 90% rule, it's coming all the way down to here. You can be like, okay, no, when it's coming all the way down to here, it will be on my daily trend line. It will be at my daily trend line. So from here, we can start looking for buy opportunities. Then it's either you wait for the move when it gets here, or you just take the sell setup. Let me see how many pips it is. Hold down here. Okay, 204 pips. If you'd like to capture 204 pips, you can take this move here. Okay, and then when it gets here at the support area, you start doing what? Looking for buy opportunities. Then you could have something like this here. Okay, let me have this. Yeah. And then something like this. I want to show you guys how many patterns you can get. Okay. Like that. Let me make this neat. Because I drew this with the 1 hour, so that's why it appears to be like this. I was back testing with the 1 hour. Okay. Can see here this is a falling wedge, and as we have studied the falling wedge, we say that it breaks to the upside. It breaks to the upside. So let's say, for instance, your target is somewhere here, the 90% rule, and your stops are below the rising wedge. Let's say here at the break, we enter here at the break area. Okay, and you know we like a risk reward ratio of 1:3 or 1:2 or more. We don't take anything less than that. So if it doesn't give us that setup, we don't take it. Okay, in this manner, we put our stop somewhere like like 50 pips. Okay, let me see here. I don't like putting more than 50, especially for Euro US dollar when I enter with the 1 hour. I like putting it like 45 pips. That's how I got it from my back testing. I saw that mostly when it goes 45 pips against me, that means I'm wrong. So yeah, something like, okay, let me just say 50 instead of 45. Okay, something like this. Yeah, I don't know. Didn't touch here. You can see after it activated me, didn't touch, and my target is somewhere here. Okay, risk reward is 1:5. Can you guys see this? So the trade went, it activated us, came back down, gave us a drawdown, and then impulsed all the way up to confirm. Then it continued going up, hit our target here. Can you guys see this? Risk reward 1:5, which is a very great trade. A very meaning if you're risking what if you're risking 3% and your reward is 5%, 5.7, it's almost like 6%. That means if you hit target, you're up by 15% on your account. Okay. Then we had something like this. I want to show you different types of patterns that you get in on a chart. Then as you move and you're progressing, you can see here we got almost like a rectangle pattern, almost like a rectangle that shows that we're going to the upside. Okay, this would have been, let me just fix this one here, because I drew this with the 1 hour, so the one that appear to be neat here on the 4 hour, something like this. Yeah, you can see it. And then let's say your entries at the break. Okay, yeah, at the break there, your target is here. There we go. It was a very good trade. Can you see this? Like if it's an uptrend, you guys should just be looking for buy opportunities in an uptrend. See, this said give us a very nice pattern. Went all the way up, hit our target, and continue to go up. So what you can do is that you can either, once it breaks the target, you can either move your stop loss to the target area and let the price go up, give you maximum profits, or you can just take your profit. Okay, here's another trade here. You can see here. Okay, it gave us almost something like, okay, let me just remove this line here, it makes it look neat. We got something like almost a falling wedge, né? And we're in what, we're in a daily, I mean, we're in an upward trend and we got a falling wedge. So it shows that the momentum is upward and there's more chances of the trade hitting target. See here, we capitalized on it. Our stops were what? 45 pip, and we captured 114 pips. Can you see the very good trade? They didn't even last for too long, a day or two, because we now at the 4 hours, so probably like 2 days. Yeah. Okay. Here's another pair. Like I want to show you guys that there's a lot of opportunities that you can get. Like when you have missed an opportunity like this, you don't have to jump in the markets and try to capitalize from it, even if you have missed it. Like just let it go. You'll get more. Can you see something like this here? Can you see? And these are your, what we were speaking about. You do know that the market moves in 3 phases, like your impulse, and then your corrective phase. Okay, then your impulse. Okay, you saw that the impulse correction, impulse phase. So that's what you should be looking for. Ne? Okay. Let me remove this so it becomes a bit neater. Okay, and then price continue to go all the way up. Here we hit our 90% rule, came here. But you could have moved, I don't know, you could have just done something like this, because you know how you measure targets of this. Like you take the impulsive move, ne? And then the same leg that you took from the impulsive move, it gives you the target. So you could have done something like this, but I don't like using this method for my target areas. Could have done something like this. Can you see the target area somewhere around here? But yeah, price continued to go all the way up. Then yeah, it gave us almost something like a pattern that breaks to the downside. Let me have this here, like this. Okay, it happened like this. You guys can see that. So you can see that this price, this pattern breaks to the downside here. Né? So someone would have sold here, stops here, and target here. But since now we are in an upward, like the momentum is to the upside, we're in an uptrend. When you're taking your sell trades, like it won't be as good as taking the buy trades. Do you guys understand that? Like your sell trades are more likely to hit stops, and your buy trades are more likely to hit target, because the momentum is going to the upside. Because see here, this is a very good trade. You take your sell here, your stops here, your target here. Price impulse down, it corrected, it impulse, although you could have took another entry here, so entry here, impulse down, but see what happened afterwards. It started, okay, a very nice management would have been something like this, ne? Price come here and then you move your stops to when it breaks somewhere around here, you go out. This would have been a very nice management. But then for someone that wasn't paying too much attention, this is what happened. It went up, it went down. Then the person still thought that there's chances of it going all the way down. The person held it. Then price came all the way up, hit the stops. Or worst case scenario, if there were never stops, it went and gave them a larger loss. Okay. Can you guys see that? Okay, and then here price came. Okay, we had this line, something like this. Something like this, yeah. Then like this. So yeah, you guys can see that this is a reversal. This is a continuation of this reversal. Ne? This is a continuation. This is a continuation. This one here is a continuation. Okay. Let me move. Yeah, okay. We saw something like this here, a pattern that shows that we're going to the downside. It broke impulsively. Someone would have took a sell entry. And then let's say you placed, you can see here's your first touch, your second touch here. And the reason my lines are a bit messy is because of the 1 hour that I was using. And then you could have seen this as an impulse correction, impulse move, ne? Something like this. And you're not wrong. And correction. And then impulse. Ne? No, you're not wrong. You're very right. Just that the momentum is to the upside. And here it came. Okay, the 90% rule is down here. It came, it hit target here. Can you see? But it's in an uptrend still, so you guys should check that out. Ne? And then here we got another pattern here. Done the same thing. Acted like a continuation pattern here. Can you see this continuation pattern? It broke out here impulsively, went all the way down, and see what happens when I say that these let's say when you're taking sells in a bullish market, price is more likely to go opposite direction. Because check this out. It broke out, it corrected, and now we're expecting a move to the downside. Ne? Okay, we're expecting, here's an impulse, a nice correct. This is a very beautiful one, a nice correction. Then expecting a move like this. Ne? But since the momentum is to the upside, see what happened. It came all the way up. Let's say if you took a sell, you had a sell here, and then you put your stops here. Then you took another sell here, you put your stops here, you move the stop from here to here, and this one here. Price would have been in profits, nice profits, and then it goes against you. Can you see that? Okay. But check this out. Okay. Here's a very nice continuation pattern to the upside. Could be involved in something like this here. Very small stop. 45 pip. Because I told you from backtesting, it allows us to utilize 45 pip. So you can see it hit target. Even though if you could have went up, I don't know, but yeah, it hit target. You could have seen that. It's a continuation pattern, this one here. This one here is a continuation pattern of this breakout here. It's a breakout continuation pattern. And okay. Could have seen something like this here. A nice continuation pattern here. Okay. Check this out, a very beautiful one. And since we know that the momentum is to the upside, check this out. Let me show you guys something. Let's take a buy trade here at the breakout here. Ne? Okay, and our stops are something like below here. Okay, let me move it like, okay. Something like this here. Check, okay, here's our target here. Yeah, okay. Can you guys see that? And you could have seen another entry to be something like this here. A scaling position. You guys know of scalings, ne? Scaling position, check this out. So you could have 2 entries on this trade here. Somewhere here. Let's stop somewhere here. Oh, a 50 pip stop loss. Like I wouldn't want anything more than a 50 pip stop loss. Okay, it's okay. The target's still there. Okay. Can you see this? So you captured, like, let's say 188 pips on this and 173 pips on this. So around 370 pips overall on these two trades. And price continued to go all the way up. And you can see this here. It gave us almost like a double top formation, a double top, but then it didn't progress to the downside. Because why? The momentum is to the upside. That's what I'm trying to show you guys here. And check this out, almost like a double bottom. See what happened after the double bottom? Shot all the way up. A double top here, a double top formation, but didn't progress to the downside. Can you guys see this though? Can you guys see this? So yeah, there's a lot of it. Like I can continue for years doing this here, but then I believe you guys saw it, and I believe you guys got value from this lesson. And I'm looking forward to having you guys on our next lesson and giving you guys clarity on what happens in the market and what doesn't happen. Okay, before I just end it off, check this other one. Very nice bull pattern here. Okay, check this out. A very nice one. Can you see it? Broke to the upside, didn't look back, went all the way up. You could have captured in a nice let's see, 200 pips, 250, but okay, let's somewhere here, 200 pips. It's okay. It's a very good trade, but you guys can see what happens now. Like you do get a lot of these patterns, your continuation and your reversal patterns, like and depending on what type of the market happens, like let's say if it's a bull market, a lot of patterns that break to the upside are the ones that are going to be high probability. If it's a bear market, a lot of patterns that break to the downside are going to be high probability. So that's one thing that you should look at. Like look at these patterns. Look at all of these patterns. And it doesn't mean that your trades are not going to hit stops. Like, I mean, are not going to hit stops here. Your trades are going to hit stops. There are times where you're going to meet, you're going to hit stop losses, but there's higher chances of you hitting target. And the advantage of it is that you're using a risk reward of 1:3. Yeah. Using a risk reward of 1:3. Check these patterns. Okay, this one here we saw. Yeah. There's a lot of these patterns, and like there's like this kind of strategy works at each and every pair, but then you just have to backtest your pairs, the ones that you feel comfortable with, because other pairs move fast, slow, very volatile. Others are just corrections, and you just have to go through the pairs and see what you prefer and what's comfortable in your trading setup. Okay? And yeah, on our next lesson, we're gonna be looking at the back testing and the trading plan, so you guys can start trading like professionals and experiencing profitability. Thank you so much for watching our lesson, and we're looking forward to having you on our next lesson, where we'll be speaking of the risk management, backtesting, trading plans, and all sorts to be able to capitalize fully on your trading plan.